like this can be frustrating because it feels like something was missed. And this, for me, is the one that got away. Right now, I don't feel as much like I'm chasing the bus as it leaves the bus stop in middle school. Everyone remember that feeling? Because I do have QQQ, we do have SMH. These are setups that we've talked about in Charts and Coffee. These are setups that we've talked about here in the Mastery. These are setups that we even discussed in some of the videos last week. But SPY does feel like the one that got away. But let me show you what we're going to do going forward. And let's not take SMH and QQQ off the list. I do have the 17, November expiration, so I still have a little bit more time. But I want to start thinking about what that next entry is going to be. And when we have a move like this, there's a big gap up, right? We've definitely started to accelerate to the upside here. Same thing can be said of QQQ and NQ. The thing that I want to point out is really visible on the futures contracts, and that is just how above normal volatility this Tuesday session has been. And even though there's a part of our brain that says, look, we need to chase this, we need to get long, this is where I'd say we still want to wait for some kind of mean reversion, right? And that is going to be the 34 EMA wave. That is my mean reversion. So put the 34 EMA, one on the high, one on the close, and one on the low. All right, and that's these moving averages right here. In a trend, the 34 EMA wave is a powerful mean reversion zone, right? So even though I'm getting great follow through on those QQQ calls and SMH calls, that was yesterday. That's already happened. I'll manage those with a trailing stop. And now I'm going to ask myself, what do I want to wait for next? Let's stick with the 1 hour time frame. Let's also remember that Wednesday is going to bring, of course, our producer price index. So we might see a little bit of volatility with that 8:30 Wednesday AM hot zone. And if we get a little bit of a pullback on the open, right, I'm going to ask myself, can we start building a long position on the 1 hour time frame? And it's going to be the wave that I'll likely focus on more. All right. So 34 EMA, that's the mean reversion. And by the way, let's take a look. So a lot of folks might say, okay, Rog, why the 34? Proof's in the pudding, gang. It's the moving average that I've been using for 3 decades. And it's what I like the best. Through here to here, this is all an uptrend. So only within the context of an uptrend will I look for a mean reversion to the wave. 34, right? It just works. I find it works better than other moving averages. This is what I've tested. This is what I find to be the optimal probability for pullbacks. Okay, that's the NQ. What about the ES? And by the way, if you recall the video from last Tuesday, XLF has to break 34. We have. XLF is trading above 34. It's pulled back a little bit some, but it's above 34. It's trading through an important resistance level, and this is going to give the S&P now the ability to fire on 2 cylinders, tech and financials. But I look at this. This is higher than normal volatility. Enter the 34 EMA wave. We inherited an uptrend on Sunday. Still have one. This is the 1 hour time frame, by the way, gang. So this is a short-term swing. Once again, wave, right? 34 exponential moving average, okay? And by the way, people always say, why the 34, gang? So Cliff Notes version, high school Raghee got really curious and then got curious again. For about a decade, I was curious about moving averages as dynamic support and resistance. And it would come up time and time again. So in the mid-90s, I decided that I'm going to test the 8, 13, 21, 34, 55, 89, 144, all the way up to 1597. Those are all Fibonacci numbers, by the way. To find out when in the context of a trend, which moving average more often than not acts as dynamic support and resistance. And yes, gang, sometimes the 21 kicked in and sometimes the 55 kicked in, but the 34 really was, as I like to say, baby bear. Not too hard, not too soft, not too hard, not too hot, not too cold, right? It was just right. And that's why I stick with that 34. But notice it's not just the 34 exponential moving average on the close, it's a zone. 34 EMA high to 34 EMA low. That's what these moving averages show. So that's what I want to do in QQQ SPY. And then if I add in some of the Magnificent Seven, gotta have a trend, gang. Gotta have that trend. Okay? Can I do that with Apple? I can. Right? So ask yourself, when we have a trend, and this is why the multi-trend is so important. And one of the things that we've been experimenting with, and you can kind of see it here because it's in Raghee Labs right now, is having a wave that turns on and off. Right? Do you see that? So a big shout out to the Lorna bot. We're working on making sure that when the wave is not a viable choice, right, we can rely on the daily price movement ranges. Right, we have this, but when the wave is not valid, then just I want it to disappear. I don't want it to be a temptation hanging out there. Right? So when it's green, when that wave is on, this is what I'm talking about. This is what I'm talking about, right? And you'll see, hey, Rog, sometimes it works even when it's yellow. You know, when the trend is overall moving higher, then there is usually a pretty good chance a 34 EMA is going to hold. There's Apple for you. Okay, what about something like Meta, which has been really strong? And this is all Magnificent Seven. This is why I'm so bullish. The NASDAQ. We're going to take a look at financials as well. Once again, I like Meta as an example because sometimes the daily price movement ranges are going to be there, and sometimes we're going to fall a little bit short. All right? Sometimes we're going to fall a little bit short. When we have proximity to the wave, this is where I'll tell you, look for those minor lows as well. That's a minor low pattern. That's that arrow right there is. So I'm giving you all a lot of visuals, a lot of objective, process-driven reasons to focus on the long side with different tools when it is more likely we're going to follow through to the upside. So Meta is an example where it's a little more challenging than what I just showed you, right? It's not always going to be a textbook example, gang. I wish trading was all textbook examples, but we're not always going to get that. Then what about financials? Because this is a big deal for the S&P, gang. This is a huge deal for the S&P. Financials are trying to organize more and more. And here's one fantastic overlap. Volatility by way of the daily price movement range, Yahtzee, I love this. And I've got my 34 EMA wave. Look at how they're overlapping in a green trend. It's exactly the kind of thing I want to take advantage of in the XLF and JP Morgan. And the way that is so powerful for the SPY is, again, both the cylinders, tech and financials, firing away for the S&P futures and the SPY. Once again, focusing on that pullback to the wave. Yeah, and by the way, if I can get the daily price movement range and the wave to, this is a volatility-based zone. That's volatility. This is price. Remember the four factors, gang. You've got volume, you've got volatility, you've got price, and you've got time. And if I can have 2, 3, 4 of these factors kick it in, all the more reason that there can be likely a bid that steps in around 444 to 443. And then that's going to line up with the XLF. That's going to line up with the XLK. That's going to line up with Microsoft. One mind, many markets, right? Focusing on the leader, QQQ, SPY, NQ futures, ES futures, then the heavily weighted sector, and then lastly, the stock. And so this is where we want to put all this together. And remember, gang, follow through in a trend is far better than follow through in a non-trend. So Microsoft has very good structure. Traders willing to buy pullbacks in a trend is higher than traders willing to buy pullbacks in chop. So if we can prioritize these trends, and that's what we've been doing for the last week, we're going to be in good shape. We're going to be in really good shape. And that's what I want to do. And by the way, for those of you that are wondering, Rog, can this green thing work on a 5-minute? Can it work on the 1 hour? Can it work on the daily? All of the above. All of the above. But if I'm going to play the mean reversion of the 34 EMA wave, it's got to be in a trend. And here's a great example why we still want to use these daily price movement ranges. Okay? Because sometimes the mean reversion is really far away, but the volatility support is still kicking in pretty darn nicely. Okay? So keep that in mind, that they're both viable in the trend. And there's a lot of things to love about what's happening right now. So I had a lot of attention on QQQ, SMH, SPY. Let's add XLF into the mix. Let's keep those relative outperformers still, top of mind. And then, Apple, Microsoft, Meta, Amazon. Think about those Magnificent Seven and their weighting in the S&P and the NASDAQ. Remember, so much of the heavily weighted stocks in the NAS are also heavily weighted stocks in the S&P. So there's a lot to like with what we're dealing with. Here's another one. Look, keep an eye on, say, 144 to 143 on Amazon. 1 hour trend. Let's get that mean reversion. Let's get that pullback to the daily price movement range. All right. And that's what I'm focused on here, gang. Let's look to the upside. Bond yields are coming down, as the ZB is moving higher. We have the US dollar coming down as the euro is moving higher. It's a good time to be a bull, gang. We've been bullish for a long time. Now we're just getting a nice acceleration. So let's abandon all that doom and gloom stuff and focus on where the uptrends are really outperforming.